This conference will now be recorded.
Fine. So yesterday we have started like understanding about fixed assets. So let us understand. So for fixed assets, the first point is depreciation. Okay, the first point is depreciation. First we need to understand depreciation. So in the system we need to create depreciations profile. So in TCS company, let me go back to TCS company. The first point is we need to create, yesterday we have discussed, we have started fixed assets. The first point is depreciation profiles. Give me 1 second. Where is this depreciation profile? Yeah, sorry. So we need to create depreciation profile. One is straight line, that is straight line service life. So I have mapped straight line service life. There are methods are there. We'll discuss this one later. One is straight line service life. I'm mapping monthly as discussed yesterday. Now another one is reducing balance. If it is a reducing balance, then it will ask you to percentage. You need to mention the percentage. 50% I'm mapping. I want depreciation monthly. Okay, here we have calendar, we have fiscal, anything is fine. So like this I can create. And for straight line, it is calendar also fine, or fiscal. If you map fiscal, it is fiscal period. If you map calendar, it is a month or monthly, quarterly or something. Either one is fine, no issue. As per your comfort, you can define. Okay, so one is reducing balance, another one is straight line. Okay, two methods I have created. Next, as I discussed yesterday, one is like Income Tax Act depreciation profiles I have created. First one, in this I have created straight line, service life and reducing balance. These two methods I have created. Next, as I told you, there will be different acts. One is in India, it is Companies Act. Another one is Income Tax Act. In the same manner, different countries have different acts. Okay, this is once again taxation and fixed assets, country to country it will be vary, but majority countries, these are the two acts it will be there. For Companies Act, the calculation in the system we have a layer called current layer. For Income Tax Act, we have called layer called tax layer. This is possible. This is where it is available, means it is in books. It is in books. Okay, in AX20, this is actually in D365, it is books, whereas in 2012 it is value model. In 2012 the form name is value model, in D365 is books. So let me go back to this depreciation books. So we can create here, there is current layer, tax layer. Apart from that one, there are another some more else available, operations layer. In 2012, you will find only three: current layer, tax layer, operations layer in the value model. In value model, that is form name is value model. In 2012, it is only three. Whereas in D365, it was extended 7 more layers, total 10 layers. So this layer concept is available and used for fixed assets only. Even though it is available for some other forms, but it will not be used. It will be used in like fixed assets only. So for Companies Act, I will use current layer. For Income Tax Act, I will use tax layer. If it is some other acts also available, then I can use operations layer or custom layer 1, 2, 3, 1, 7 like that. Okay. Now I will create that one. So before that, okay, let me create. Suppose laptops. So laptops, I'm mapping like fiscal calendar. Let me verify what is the calendar I have mapped for TCS company. The ledger form, general ledger, ledger setup, ledger. I have used the calendar fiscal. So I would like to use the same calendar fiscal. Okay, current layer I have mapped. This is
So
books.
you don't have asset books in 2012?
Actually, in 2012, along with this model, we have a depreciation books.
When you say books right now, it is asset books only, right?
Not asset books. Actually, in 2012, there are two functions. One is value model. In value model, only three layers are there: current, operation, and tax. Okay. If I want another some more information, it is not available here. In this, we have total 10 layers. Am I right? In D365, we have 10 layers. In 2012, there is value model and there is a depreciation books separately. In this, we can create our own. This calculation is a little bit tricky and complex. I mean to say, along with these three, if I want, I need to do it separately. This is a tedious job, complex job. So this is available in AX 2009, 4.0, 3.0, 3.0, 4.0, 10, AX 2009 and 2012 versions, all versions. There is only value model is 3 layers and another books you can create your own. Now in D365, this was depreciated and it was extended 7 more layers. In this only, the value model was renamed as books. This form is only renamed as books and it was extended along with 3 layers. It was extended to 7 more layers, total 10 layers, so that it will be flexible. Understood?
Okay.
Okay, you can verify in AX 2012, you will find depreciation books, extra information, that is different functionality. If you want to do execute like depreciations, you need to do separately, whereas here everything is in similar same kind of functionality, we can use it. So particularly for USA, there are like 5 to 6 layer concepts they need. In India, it is 2. In India and APAC region and Gulf region, it is only 2 will be used. In your USA, it is around 4 to 5 or 6 calculations will be there.
Yeah, I mean, logically, depreciation books are, modified into books, but you're saying
No,
value model is turned into books.
no. Your assumption is not correct. Depreciation books is not converted to books. It is
Mhm.
value model is converted to books.
Okay,
Value model is book converted to books,
okay,
because in the value model only we have current layer, tax layer, operational layer. Whereas in depreciation books we don't have.
okay.
If you want, you can verify. Okay. So by looking into naming convention, don't misunderstood. It is not depreciation book. This functionality is completely depreciated.
So okay. So I have different question. So if you have for each asset, you create a book.
Hmm. Hmm.
No, my question is for each asset in the company,
Uh,
you create one book.
yes. Yes. It's not like asset group, asset groups, fixed asset groups.
Yeah,
Okay.
laptop is one asset, right? You have a tablet, you have a iPhone, right? So
So
you create, yeah.
still I need to explain here. Actually, depreciation profile it was created. Next
Mhm.
books, next groups, fixed asset groups. Otherwise, I will show from here. It is better to understand from here. One is depreciation profile, next fixed asset groups, next books. After that, fixed asset posting profiles. Next, fixed asset parameters. After that only you are going to create a fixed asset master. Understood? This is first step. This is mandatory
Yeah.
steps.
So yeah, but what exactly is fixed asset group actually? I mean,
Okay,
um,
I'm going to do it that one. Okay, so
okay.
that okay. So let me create fixed asset groups first. Where it is? Ah, laptops. Otherwise, okay, laptops. One fixed asset group. Next, missionary.
Yeah.
One
So
group.
for laptops,
Is your
tablets, and iPhones, you create all in one, or you create one is
That
separate
is
for
your wish.
separate.
That is your wish. So suppose I want this is as per the customer electronics. Your wish.
Yeah, but normally laptops and tablets and iPhones you group as one normally
But
as
but
fixed asset.
usually no. Usually the best practice is they will do like laptops one group. So what is your another group?
Tablets, iPhones,
Okay, iPhones,
and
tablets,
tablets.
whatever it is. So is your health is not good, Ravi? Your
No, no,
throat
no.
is
I'm fine.
yes.
Yeah, yeah. I have a
Okay.
different because of whenever I get cold, I have a different one. Yeah.
Oh, okay, fine, no issues. Okay, so like this you can create. Why? By looking into this one, I will create laptop one like Samsung laptop, Lenovo laptop, something I will create. Then I can understand how many laptops are there, how many tablets are there, how many iPhones are there. If it is created like this, if it is created directly like electronic items, like in that electronic items, how many laptops, how many iPhones, how many tablets. If I want, I need to do a re-exercise. Am I right?
Yeah. So it's better to do it this way. Okay,
Yes,
then.
exactly. That is the reason we'll try to do it differently, like as many as groups, as many as groups. Fine?
Okay, and then for each group you create one book.
Yes, exactly.
Okay.
Exactly. Depreciation books. So let me create laptops. Here without anything means it is layer, current layer, and for tax layer I will create
Again, for each, okay, for each layer you create one book then.
yes, I need to create.
So first I group them and then I create books for each layer.
Yes, yes.
Okay.
Okay. And here I need to map depreciation profile. For
So then
tax
when you're
layer, I want
when you're bringing from legacy, is it so easy to bring the data?
not only this one, your complexity is two areas. One is inventory valuation, another one is fixed assets. These two areas are toughest situations. Okay, I will give you the best options after some time. Remind me what is the minimum risky so that I will be in safe.
Okay.
Okay, for opening stocks, there is because whenever I am facing interview, I'm just attending interview. At that time, some interviewers they will ask like some questions. First they are asking questioning. After that they are requesting me. I am facing this problem. How to mitigate? Rather than interviewing, they are asking like requesting.
No.
Because I know the complexity, the implementation. Whenever you are doing implementation, very complex. If you did one mistake, you cannot come out.
Okay.
Okay, that I will discuss.
Yeah.
Definitely I will discuss.
Yeah.
Okay, fine.
Okay.
Now, so current layer, for current layer I will not enter anything. That is your wish. I will not enter anything. Then I will map like current layer. Okay, for current layer I have mapped a straight line. For tax layer I have mapped reducing balance. Tax layer, reducing balance. Okay. Next, here in the laptops, whenever I'm posting in the current layer, I want to post tax layer as well. Tax layer as well. So whenever I'm posting current layer, post in the tax layer. That how can I do? I can map here, map the tax layer. If I am purchasing current layer, it is linked to tax layer also. Understood? This current layer is linked to tax layer, so that whenever I'm purchasing, I should not require two times purchase. One is current layer, one is tax layer. I can do acquisition in current layer, automatically update in the tax layer also. I'm informing to the system. At the same time, when I'm selling, that means disposal of sales. At that time, please post from the current layer to tax layer. Disposal of scrap. For acquisition, sales, scrap. In these scenarios, whenever I'm posting any transaction in the current layer, try to post in the tax layer I'm defining. I don't want depreciations. Anyhow, you need to do separately because depreciation calculations are different. So yesterday I have introduced three words. One is acquisition, another one is depreciation, and disposal of sale, and disposal of scrap. Understood? Acquisition, depreciation, disposal of sale, disposal of scrap. This depreciation is always, as I told you, there is a different calculations. But acquisition and disposal of sale or disposal of scrap, while doing current layer, together update in the tax layer. I am updating in the system. This is derived books. Derived books. Actually, in 2012, you will find two tabs. One is value model, one is books. One is books. But whereas, as I told you, depreciation books was completely depreciated by Microsoft in D365, only books are available. This is actually value model functionality. Clear? Everyone, till now, anything, any doubt? So we have created depreciation profiles to do the calculation for straight line and reducing balance. Now I have created fixed asset groups. Now third one, books. This is fixed asset groups I have created. Third is books. Okay, in 2012, instead of books, you are going to do value model. In the value model, so the why the naming convention is value model means, if you want to calculate, if you want to verify the value of the fixed asset, then we need to go value model. That is the reason it was mentioned as value model. Now they are mentioning simply books. Okay, clear? Any doubt till now? These three very simple masters. Now posting profile. Before going to posting profile, in the fixed asset groups we can have number sequence. We can attach number sequence. What it means, suppose we are a little bit deviating. Suppose customers or vendors, whenever I am creating a vendor, number sequence is, it is continuous. It is continuous number sequence. Of course, it is mapped in the number sequence. It is, suppose Ramana Electronics. Now I am creating another one, 22, Radha Electronics. But it is not possible group wise number sequence. I want group wise number sequence. It is not possible. It is continuous. 21, 22, 23, 24. It is irrespective of group. Group wise number sequence is not possible for customers and vendors. For customers and vendors, it is not possible. Of course, there is some enhancements in D365. It is, if it is a shared vendor, that is another concept. Shared vendor concept, like shared data, that I will discuss later. There it is possible. It is completely different scenario. Okay, but normal scenarios, it is like group wise number sequence is not available. Now if I go to fixed assets, groups, in this I can attach number sequence. So for laptops, I'm just taking laptops. For this I want number sequence as LP. So if I attach, then number sequence will come TCS-LP001, TCS-LP002 for laptops. For machineries, I can have number sequence.
So group level number sequence is only in fixed asset groups, not in vendor groups, not in customer groups.
Yes, yes. But in D365, actually this is available in 2012, 6, like 2009, every version it is available. But in D365, recently it was introduced. If you are using group wise number sequence, if it is a shared data, it is recently it was enhanced in the vendor groups and customer groups. Still I am not completely exploring on, I have not explored on that one. But in D365 I heard like group wise number sequence is possible for vendors or customers also recently in D365. But in 2012 and all versions, previous versions, 100% it is not exist. Item group wise number sequence or vendor group wise, customer group wise number sequence is not exist. But in D365 recently I heard like group wise number sequence is possible, but I have not explored completely on that one in D365. Okay, so this one is fixed asset group wise number sequence is available in 4.0, 5.0, 5.1, 6.0, 6.1, 6.2, 6.3, all versions it is available. Understood? Okay, now in this laptops I need to map books because I have created books separately. I need to map books. If it is a laptop, if it is a laptops, it is current layer. If it is a current layer, how many years? Suppose 6 years or 5 years. 5 years means 60 months. And a tax layer. So for tax layer, service life is not mandatory. But for current layer, like for a current layer, service life is mandatory. How many years? The life of the fixed asset. For tax layer, it is not required. Anyhow, the percentage is mentioned. 50% in the reducing balance. Already reducing balance percentage is available. If it is tax, if it is a current layer, it is must. You need to mention what is the life. Understood? So what we did it, fixed asset groups created, number sequence we have attached, and we have mapped books. Clear? These three? Any doubt in this? Very simple, but you need to remember the sequence. That's it. Depreciation profiles you need to create, fixed asset group you need to create, and then books you need to create, and go back to the fixed asset groups, and you need to attach number sequence and books. So I have mapped for laptops. Example, I have mapped for laptops. Fine. Next, posting profiles. Fixed asset posting profiles you need to map. So first I'm doing for books like laptops. So I'm mapping the ledger account. This is asset account. It is 180 something, it will be there. Okay, and then this is offset account. It is purchases or expenses. Let me verify. Give me 1 second. Let me verify in USMF. behavior exactly I would like to map. So 180. Okay, this is not the correct one. This is they have mapped like retained earnings, which is wrong. No, it is not correct. This is not correct one. Retained earnings. This is the purchases are like normal finished good purchases, or it is fixed assets. Acquisition. 1 second. Star assets. It will be 6 series or 5 series. Okay. This is not the one. It is better to map because we are acquiring purchase expenses. So these accounts will be provided by accountant. This is the major you need to remember. This is equation. Equation means the asset value. It is fixed asset equation. Okay. Next, current layer and tax layer. Let me verify in INMF how it is. Okay, so it was mapped with cash. This is the best practice. I will map because I'm paying cash. That is the reason I have mapped like cash. This is correct one. Okay, debit will be this account, credit will be this account because I will pay money, otherwise bank, whatever it may be. Okay, it is must you need to map. This is equation. In the same manner, you need to map equation adjustment, depreciation adjustment, disposal of sale, disposal of scrap, all these things we need to map. We'll see this one later. Okay, I mapped only equation. That is enough for us now. We'll see this remaining all also. Even disposal also there is some other. I will discuss this one later. Okay, so equation. I have mapped equation. Next, fixed asset parameters. This is fourth one. Next, fifth one is fixed asset parameters. So in this fixed asset parameters, you need to map that parameter here. Fixed asset posting profile. And along with this one, you need to map this checkboxes also. I will explain you this one later. What is this checkboxes? Okay, you can enable this checkbox also. What is this checkbox and what are these things we'll discuss later. And as I told you, like threshold limit here, the fixed asset value yesterday we have discussed like whether I have purchased a printer, whether it will be a fixed asset or expenses. So you can mention here, this is informative only, like if it is below $500, it is expenses. Above 500, it is like fixed asset. You can map like this. Okay, fine. So the major is important is this one and this checkboxes. These checkboxes I will come back and I will discuss once again. So what we did it, one is we have created a depreciation profiles, another one is fixed asset groups, next depreciation books actually we have created books, and then fixed asset posting profiles, and then parameters. After completing this one, then only you can create a fixed asset master. So I'm creating. So the setups I have configured for laptops. That is the reason I'm doing for laptops. Suppose Samsung laptop something model 1. I have created one model. Once it is created, there are so many things. This is informative only. If you want, you can enter these details like make, model, serial number, model year, technical information 1, 2, 3, next maintenance. If it is a machinery, we need to have maintenance, insurance details, location details, and reporting, sorting. These all are informative only, not much intelligence, informative, so that if you enter this one, you can generate reports and you can develop a report and you can get the details about the fixed asset. This is not for calculation purpose, it is for informative purpose. The majorly it is for information. So you can generate reports and you can verify. So you can enter here only openly. If I speak, by default Microsoft will not give all the reports. You need to develop as per your comfort. This is all are informative a lot inside. Okay, this is fast apps. Okay.
So this is actual physical item, physical asset.
Yes, exactly.
So
So laptops,
then it is kind of product as well, right? So does it have a SKU number?
what is the purpose of that SKU number?
SKU number, like say the barcode thing, right? So you buy it, you retail. I mean, your it will be every
Here
product is scanned, right? So
serial
that
number, it is
scan,
possible.
yeah. Okay.
It is possible. So we can. Okay. So this is, as I told you yesterday, example like car. If the car is in your inventory, in your warehouse, it is your inventory. There is no depreciation. If the car is you are using in your company, you are using, then it will become a fixed asset. Laptops also. I'm purchasing laptops and I'm selling laptops. Then it is inventory. If I'm using a laptop in my whatever, suppose I have 100 laptops in my like godown or in your warehouse. If you are using, start using means it will become it will be moved from inventory to fixed asset. That we'll discuss. Okay, here laptop I have taken. Now if you look at the books,
No, see,
here
actually, for I have a question. For
mm,
laptops or car or whatever,
mm,
the moment you purchase that, so the
mm,
depreciation starts, whether you use it or not.
yes, yes, yes,
So then they should be noted down in the system, right?
yes, yes.
Okay.
So I'm going to that points. Okay. Now I have created a fixed asset laptop. Samsung laptop 1 I have created. This is still not acquired. I have not purchased. So this is not yet acquired. It is created only. Still I have not purchased. So item just created only. This laptop is created but not acquired. Understood? It is not acquired. That is, if you verify the transactions, it is 0. Nothing is there. If you verify profile, it is 0. Nothing is there. All are 0 only. 0. If you look at the balances, it will be 0 because we have not yet purchased. There are many words, you will understand one by one. I will explain you all these things. You know, at this point, acquisition, you know, depreciation, you know, disposal of sale, disposal of scrap. Remaining words also I have not explained. I will explain you. At this point, 0. because I have not acquired, I have not purchased. It is only fixed asset is created. Then the status is not yet acquired. So there are two layers. One is current layer, another one is tax layer. Okay, fine. Now let me purchase this laptop. So if you want to purchase laptop, there are different ways. One is this is if you want to acquire a fixed asset, one is acquisitions. There are different types of acquisitions. I can purchase in different ways. One is like fixed asset journal. This is one type. Using fixed asset journal, I can acquire. So for that, journal entries, fixed asset journal. The journal name is not created. So once again, it's a blank. I need to create journal name. So if I want to create a journal name, you know already, we need to go to general ledger, collapse, journal names, journal setups and names. Here I need to create fixed asset acquisition. What is the type means? Post fixed assets. Post fixed assets. FA equation. Now I can do the equation. Suppose I am acquiring this fixed asset. For easy calculation, I am taking 600. So what is the life I have made? 1 second. Okay, no problem. Whatever it may be, I have entered 600. So we have entered 6 years, I think. Let me go back to fixed assets. Fixed asset for rounding calculation, because calculation it will become easy for you. TCS. Books. The life is in this current layer. Current layer we have life 5 years. Okay, 5 years. Now 600 offset account, it is cash, it is coming. Now I am posting. Before posting, if you verify books, it will show tax layer also. I'm sorry. Okay, why? In the books we have mapped. Whenever you are posting current layer, post the tax layer also. That is the reason it is coming automatically tax layer also. Get my point? I don't want to purchase in 2 layers. I would like to purchase, because while doing purchasing, whether it is a current layer or tax layer, both are same. There is no difference. Okay. So it is automatically in the current layer, it is posting to the tax layer also. That is here, you can see. Now I'm posting. Once it is posted one number of vouchers. Now if you verify the voucher, look at this one. It is 4 transactions. One set is current layer, another set is tax layer. Understood? So till now, till now we have posted like so many transactions. All those transactions are in which layer? It is current layer. I mean to say, my intention is here. Suppose I would like to verify purchase order we have posted and we have invoiced. We have posted so many transactions. There is so many invoices, there is so many transactions. So till now, what is the transaction? I have shown like I have concentrated on these values, but I never discussed about the last point here. So all the transactions by default it will be posted to the current layer. All the transactions are posted in the current layer. Now only for fixed assets. For fixed assets, let me go back to fixed assets. Journal, post a transaction. If you verify voucher, it was posted in current layer and tax layer. It was posted in current layer and tax layer. Now if I go to the fixed asset master, in this, if I go to books, I cannot see the value of the laptop directly. I cannot see. I need to go to books. In the books only I can see the value. So current layer, the value of the fixed asset is 600. In US dollars it is 600. In like euros it is 447. It was converted. Okay, if you verify balances, it will show the value 600. For 47, it is in reporting currency, it is in accounting currency. You can see here in profiles also. In this, it is showing the depreciation. I will explain you this one depreciation slowly, no issues. I will explain this one depreciation calculations, how it is coming, but in the current layer. In the same manner, tax layer also it was updated.
Yes, Satya.
Yes.
I might have missed something, but
Yeah.
so what is this layer, tax layer and normal current layer?
Can you come again once again?
So tax layer and current layer, what is that? Like Companies Act?
As per the Companies Act, it is current layer. As per the Income Tax Act, it is tax layer.
Okay, every asset will have both values?
Fixed assets, for USA, if it is USA, there will be 4 to 5 different calculations required. You need to submit to the government authorities in USA.
Oh, okay. These are the calculations for the fixed assets. For the Companies Act, the 600 is the value, and then Income Tax Act,
Yeah.
it will be around some 650 or 620, something like that.
Yes, because this depreciation calculation, in this depreciation calculation, I need to explain. Yesterday, I have introduced this straight line balance.
Right.
So depreciation calculation will be different. Am I right?
Correct.
So that can be tracked through this one. That is the book.
Okay, okay. So we are just learning only current layer and tax layer.
Yes, in USA it will be there like 3-4 layers.
Okay.
4 to 5 layers it is there in USA. Whereas
Okay.
in India, Gulf region and APAC region, 2 layers are enough. 2 layers are enough.
And for the purchase order and sales order, it always will be in the current layer.
Not only purchase order, any transaction, it is always current layer, because till now you have learned so many transactions, am I right? Vendor
Correct.
invoice, vendor payment, customer invoice, customer payment. There are many transactions you learned till now, all are in current layer.
Right, right. Only
Now
for the fixed
extra
assets we have this one.
yes please.
Okay. Okay. Yeah, got it.
Yeah, so only for fixed assets we are having extra layering concept for fixed asset calculations. For fixed asset calculations we need layering concept, so that I can do calculation. Now I will do depreciation for this one. For laptop I will do depreciation. So depreciation value will be different from this, valuation is different and this value is different. Am I right? Yesterday I have given like car example, like after 12 lakhs is the car value. If it is 6 years is life, after 1 year it is 10 lakhs. It is straight line method. Whereas reducing balance, it is 50%, then 6 lakhs reducing balance. So you need to submit to the government authorities. As per the straight line method, the car value is 10 lakhs. As per the reducing balance, the car value is 6 lakhs.
Okay.
You need to submit to government authorities in both concepts. Okay.
Okay.
Fine. So tomorrow you will get clear picture, little bit more insights about fixed assets, because tomorrow I will show you depreciation calculations, so that you can understand little bit more insights about fixed assets. Okay, so still I need to show you depreciation calculations. So as of now it is only acquired, it was purchased. Now I need to do depreciation calculation. So how to do this depreciation calculation, tomorrow I will show you. Okay, Ravi, Vinod, Kumari, is it clear or any doubt till now?
Yeah, okay. I'm good. Maybe I'll go through this video once again.
Yeah, sure. Ravi, Kumari, any doubts here?
No, Satya.
Fine.
I'm okay. I'm good.
So I'm stopping here. Tomorrow I will show you like depreciation and disposal of sale and acquisitions can be done in different ways. One way only I have shown. Another way is like there are some other ways. Another one is purchase order to vendor invoice. Using this process also we can do it. Tomorrow I will show you. In this there are two options. Option A, item like fixed asset. Option B, fixed asset group. And another option is there, inventory to fixed assets. Another option is there, fourth option, we can use general journal also. These are the 4 options you can do acquisition. Okay, today I have explained only this. And then next, depreciation. This one only one way. We don't have multiple options, only one way. Depreciation calculation. Next, disposal of sale and disposal of scrap. If it is disposal of sale, you will use the same function. or another option available, fixed asset like free text invoice. Using free text invoice, you can do the disposal of sale, or this option. These two are available. And disposal of scrap. Disposal of scrap means you are putting in the dustbin simply. Then you will use this function. So these are the methods you need to learn. You are going to learn. These are the different calculations.
So from finance perspective, how frequent is this to deal with the fixed assets? How frequent actually? Is it like every month end you have?
This one depreciation you will do the month end, every month end.
Okay. Other than that, like the remaining transactions or events won't happen a lot, I guess.
Not regular. Whenever occasionally, if you are purchasing a equation, if you are selling an equation, this is rare. Means not regular. Whenever it is occasion is happen. That's it.
So if I'm expanding company and then I'm creating a total site and separate place for the production plant, then I need to enter all the things in the fixed assets.
Exactly.
Right?
Yes, you're right. Yes, you're right. Yes.
And if I acquire a company, then what about that? Like,
it is a fresh implementation. If you acquired, it is acquisition only. Like it is implementation, fresh implementation.
so if I acquire, no, let us say if I'm a line of business and then similar line of business, I bought another company, then it's a big whole exercise, I guess, right? Because they already have an assets, they already depreciated. So that is another exercise from the beginning, I guess.
Yes. If it is the same Microsoft Dynamics AX, it is not an issue because they have already established. Am I right?
Yeah. But like,
if it is
not
different, if it is different, then it is a big exercise. It's not like exercise. It is like you need to fresh implementation. You need to have fresh implementations, like a fresh. That's it.
yeah. If I'm creating another company for that acquired company, then it is fresh. But if I'm doing the same, if I'm bringing all the assets to the existing company,
even if you acquire a company, if you want to move, because they are using some other ERP, if you want to move from that ERP to Dynamics AX, it is equal to a fresh implementation to you. Am I right?
Yeah.
That's it.
Oh.
Okay, fine. I'm stopping here. We'll connect once again tomorrow, 7 a.m. IST. See you. Bye.
Bye.
Bye.